Hi, this is Joseph. In this video, I'm going to answer a question that I get quite a bit. It's the discussion about the breakout system that I teach in the course, on the online trading course. So a lot of people are asking what's the time frame. So I'm going to talk about that in the video, what time frame I generally use it on, which one do I recommend. Also, what market am I trading? Is this for futures or is it for Forex? You can use it for Forex. You can certainly use it for Forex. I do have a section in the online course. It's a bonus section for trading Forex, but it's primarily something that I use to trade futures. So I'm day trading futures, and this can be used if you're going to be trading a prop firm evaluation or your own personal account, whichever direction you want to go. This works the same way. So this particular breakout system, it is a system that I've been using for many, many years. I started trading back in 2000. The first market that I traded was the S&P. So that was the very first account that I ever opened up back in 2000. And so I've been trading futures ever since. I also trade Forex, but I primarily focus on futures. So this is primarily something that I use on the 5 minute chart. I recommend doing it, trading it on the 5 minute chart using the system. So the breakout system is what people want to know. They want to know like what kind of signals does it generate? What's the profitability on it? How long do the trades generally take to hit their targets? Is there anything else that you need to be able to calculate your take profit levels, things like that? So inside of the trading course, one of the things that I do teach, and I talk about this extensively, I use it all the time. And you may have heard other people. I mean, this isn't anything that I created. Lots of people, lots of computers, programs use it. So they're calculating measured moves. Professional traders are going to try to do the same thing that programs are doing, computers are doing. So there's 70, 80% of the volume that's traded is going to be computer driven. So there are calculations constantly with these computer programs. And as professional traders, you can see where these levels are once you develop the ability. It's kind of like it's like an art. I don't want to call it. I mean, it's science, it's math, of course. But for a human, for a trader to get good at it, you develop that skill. So measured move targets are something that I look for at all times. I'm using it on larger time frames, but primarily I'm trading off of the 5 minute chart. So I do this on the S&P, ES, whichever one you want. So rather than comparing the numbers to, let's say, NQ. So NQ, obviously the numbers are going to be larger. And when I'm talking about numbers, I'm talking about the profitability in the trade. So generally, a lot of my trades are going to be, 5, 6 point target, maybe an 8 point target. I'll use that ATM on the NinjaTrader platform. I think everybody should use it. Why not? And put the stop in there. And always adjust the stop according to the setup that you're getting. If it's a reversal, and you'll know exactly what I'm talking about because I cover this extensively in the online trading course, where to correctly place your stop. I hear this all the time from a lot of um, struggling traders that they get stopped out prematurely and then, the market goes to where they expected it to go initially. And that's just generally because of improper stop loss placement. So we talk about that quite a bit. But as far as target placement or target, um, the breakout system, the breakout system that you're going to get in my online trading course, it will identify and highlight where the opportunity is, when it's developing, when it's happening. Very often you'll get maybe 15 to 20 minutes warning. Sometimes it'll happen a little bit sooner. So you'll notice this pink area right here. I'm going to show you also what it did with non-farm payrolls. So these breakouts will happen just about every day that there is some kind of a breakout. Now, again, if you're going to compare this to trading it and using this program, this breakout system with the NQ, you certainly can. Just know that the numbers are going to be different. And what I mean by that is from this low right here, you can see that we're at 6,023 and we reached a low of 59.89 approximately. So you could kind of calculate if the NQ is going to follow along on this particular day, you could see the profitability and it's going to be quite large. So again, you can use the breakout system with the NQ. I just primarily focus on the S&P. That's where I present most of my material. Occasionally, some of my educational material in the online course is with the NQ. So let's go back to the breakout system itself. Now, the indicators that you get for the breakout system are not on this chart. And I do that because obviously it's part of the online course. It wouldn't be fair to the people that paid for the online course for me to just start throwing it out here on YouTube and other places, social media, to show exactly how to use the system. So just follow along, and you'll see exactly where this once you have it, once you have the breakout system and you have the indicators on your chart, which I show you exactly how to set it up, exactly how to set up your charts like mine. You can set it up on the NQ. I show you how to do that too. You'll notice that this shaded area is precisely where the warning signal was for the impending breakout. And that's exactly what we ended up getting. Now, there are some price levels on here that you'll see. For example, this is the old support. You probably saw that if you were trading today, S&P. It bounced there perfectly, but I'm also going to show you some measured moves and how they kind of lined up right about the same level. And again, the reason I bring up the measured moves, I talk about it quite a bit. Like I teach that. I have lots of videos that explain how to use measured moves on breakout bars, single bars, legs, we're counting legs, things like that. So there's a lot of detail as far as the technicals so that you can, I'm always looking for signs and multiple forms of confirmation that what I'm seeing and the levels that I can confidently trade price to and hold on to my trade, that I'm finding multiple forms of confirmation that that's likely to actually happen. So with this reversal here, again, the first warning sign was the breakout system with the indicators, and it gave me this shaded pink area right here that showed me prior to the breakout and the breakdown that I needed to be prepared for it. Now, it also tells me the direction. So I was aware of the direction that it was likely to break down. Now, if you study price action anyway, you're probably aware without the indicators that this thing's going to drop down here anyway, that it's going to start breaking down. And that is something that I do recommend and I teach in the online trading course is being able to trade with just price action alone so that even if you don't have the indicators on there, that you would be able to trade and capture this move anyway. That's the goal, right? That's as traders, we want to be able to do that because there's so many different variables and so many different ways that computers are trading the price action that we see. So again, using multiple forms of confirmation, why would we have a breakout system? That's another question that I get. Why, if I'm trading price action, do I need a breakout system with indicators? It's to spot more of my A plus trade breakouts. This is an A plus trade breakout, this reversal bar right here. And this put us in the trade right here as it was starting to break down right there below that green line. Now, that gave us an opportunity to be able to sell it. Now, the next step is how far do we think it's going to go? Well, we could calculate a few measured moves. We could also take a look at the bigger time frame, like the 1 hour chart, maybe the 15-minute chart. Perhaps even the daily chart might give us some warning signs. Some days it will, some days it won't. And we can try to calculate measured moves on the larger time frames as well that might indicate price might come down here. So again, using price action principles and having the skill to be able to read just price action alone would have put us into this trade anyway. But again, I'm going to go back to why do we need to use indicators? We're using it as a tool to be able to spot more A plus trades so that we miss fewer of our A plus trades. When we just have chart, I mean, it happens to me. If I'm just looking at the charts with no indicators, occasionally, I'll get up, I'll walk away. I don't know exactly when something's going to happen. So, I might miss my A plus trade. I don't want to miss my A plus trades. I want to catch as many of them as I possibly can. So that's why we incorporate indicators so that we can spot more of them and we miss fewer of them. So that, again, before the breakout, I got the reversal, but before the breakout, I was able to see this. So I stay put, I stay in my chair and I wait for the opportunity to be able to short this. Again, the indicator also points the direction that this is likely to move in. Now, as far as measured moves, so this, I'm going to show you non-farm payrolls before I end this video. So that is the breakout system. The breakout system is my number one A plus trade. That is what I'm going to teach you and give you in the online course. It comes complete with a playbook for this particular setup, exactly how to get in, where to get in, what the trigger bar looks like, different scenarios, different conditions, and using the indicator, the breakout indicator, so that you can spot more of them. Just like me, again, you might miss some of them if you don't have this indicator on there. If you have the indicator on your chart, again, we're still using price action to be able to confirm and get the trade, but the indicator itself gives us a warning that something's about to happen. That's what I'm getting at. So I'll show you how it looked on non-farm payrolls. But this was an opportunity for us to be able to capture just about all of this. It depends on where your comfort level is, but you could capture most of this trade because it was clearly coming down here to this support level once we started to move through these different support levels that you see here on the chart. So one of the things that I want to draw to your attention, I use this all the time. There's a risk reward calculator, right? So one of the first things that I would do is take the first hour. They're different. This is what I was talking about moments ago, is that it's kind of you develop the skill to be able to figure out where these measured move targets are. So I'm going to take the first hour and I'm going to take the low and the high of the first hour. And you'll see that I had a target right down here, just about where that support level is. I'll tighten this up and you can see where the support level is over here on the left. It's just that low over here. So you probably saw it. I mean, it's not a big deal. This isn't magic, of course. We just know that, if there's going to be a sell-off this significant, where is it that computers are likely, and professional traders or traders in general are likely to step back in, buyers are likely to step back in. And this was clearly an exhaustion bar. I mean, there was no reason to start trying to sell unless obviously you've got more work to do and you need to study this more. I used to do the same thing. I would get excited. I would scalp some of this. This is back when I first started trading and I didn't understand price action enough. I would scalp a lot of this, and then I would see a bar like this, and with maybe an increase in volume or something like that, and I would think, okay, great, it's going to go down another leg, or it's going to go down, further. I can trade that, but that's not what this is. I spent a lot of time learning. I refer to this as the stupid trade. So I was the fool who was, back when I first started trading, I was the fool that would be shorting here if I saw an increase in volume. Just the same, it works the same way to the upside. We see these bars all throughout the week. I mean, they're always just some kind of a exhaustion move. And I teach you exactly how to see and spot and identify these exhaustion moves. Again, I refer to it as the stupid trade, and you'll see it in the online course. It's titled The Stupid Trade because it was my number one stupid trade, that no matter what, I was the idiot that was here selling right down here because of my lack of experience. So I had to teach, and learn and teach myself how to avoid that. And it took a long time for me to stop and break these old bad habits. But after a move like this, not only using tools like a measured move, the other thing that we can do is, calculate some of these, use this tool for this breakout bar right here, this reversal bar. This is one of the first things that I would recommend when you're starting to use a tool like this. This is why I was talking about what I was saying just moments ago. If you're not comfortable holding on to the entire move like this, then you would look for intermediate profit levels. You would do different things to try to find, and I teach you exactly how to use this tool and a few other tools, and leg counting, things like that might highlight where we would expect areas that there might be some profit taking. There are multiple areas that we could use, or multiple forms of or placements where we would use some of these tools to calculate some of these intermediate take profit levels. And it's good for us because we will be taking profits at the same time in the same place that everybody else is. But ultimately, the first hour range was appropriate. That's exactly what one of the areas that you could use it. You can use it for the first hour if you have a range that looks like this. Other times we'll have a breakout and we'll have one leg that might equal the second leg. Each day and each scenario is going to require a different understanding. And I teach you this in the online course. It's simple to understand. It's just that you have to work on applying it each day and getting better and better at it, testing it, practicing it, things like that. But you'll be able to spot these take profit levels right from the beginning, especially with this breakout indicator. The breakout indicator it's excellent. It's something that I think every trader needs to have on their chart. To be able to capture moves just like this. Again, I'll show you the non-farm payrolls breakout. It's set up just before the breakout. But anyway, and then the other A+ trade that I have is reversals. I'll teach you how to trade these reversals and how to capture most of this move and how to know with a great deal of confidence where it's going to go. Again, when I first started trading, I would see reversals like this, these V-shaped reversals, and I would panic. I would just scalp a little bit of it. And then I would sit back and I would be afraid the further and further it got to get into the trade. You don't have to be once you understand what's going on. So I'll teach you exactly how to trade these reversals, these sharp reversals. Not all reversals look like this. Some of them do. Today was going to be one of those perfect days where we were going to see a V-shaped reversal like this. So you could have easily gotten most of this move. Again, and a lot of my coaching students, they get these trades. I help them get into these trades. I help them spot these trades. Again, the indicator wasn't going to help us on a reversal like this, but it's going to help us on a breakout. Let me show you non-farm payrolls. So this is a quick look at the most recent non-farm payrolls. This was November 1st, non-farm payrolls 2024. So here, this blue dot right there, that's the 9:30 New York open 5-minute bar, 5-minute chart. This is the ES. And what you can see here is that this shaded area is the indicator. Again, the indicators aren't on the chart. You'll have access to that inside of the membership area. And then there's a whole course section on how to set up and use this breakout system. But again, this is the breakout system, and this is the shaded area that it highlighted prior to non-farm payrolls. I'm sorry, after non-farm payrolls, but this was the day of non-farm payrolls. And then when the market opened, then we got our breakout and then our signal. Again, I'll show you the measured move target again, why different areas. I mentioned that there are different calculations that you can use to determine the measured move target. But nevertheless, let's go back here to the indicator. So the breakout indicator is this shaded area. Now it's telling us long before the breakout, just at the New York market open, long before the breakout, you can see that there's at least 30 minutes, almost 35 minutes here. We were warned that there was going to be a breakout. Now, non-farm payrolls is right here, but it didn't give us the breakout at that point. We still had to wait. So we wait until we get the signal. You'll learn what the signal is. This is one of the signals right there where that blue line is. And I highlight my charts like this and I send them out to my coaching students throughout the day. So this gave us a clear warning before the breakout, and it also told us which direction. Again, I realize that the indicators aren't on here. That wouldn't be fair to the coaching students that have paid for this information. Again, I'm sharing this free on social media so that people can be aware of this. If you want to, they ask me questions all the time. What is the breakout system that you're using? What's the time frame? What's the best market that you're trading it on? Things like that. So hopefully all of this, all of your questions will be answered here. If you've got any additional questions about this breakout system or any of the others, reversals, things like that, let me know. There's always a stop loss. I recommend using the ATM strategy. I have several ATMs. I'm sure you probably are familiar with it. You probably use something similar. As far as the targets, so the targets, again, measured move targets. So you can see here, I'll go ahead and delete it and put it back on there. It's this measured move target right here. And so sometimes we'll use a leg, a full leg, a distance, maybe like from that high to that high. That could be the case if it was back down here when the initial move took off. But in many instances, you're going to be moving it around. So again, I talk about this in a lot of detail in the course, but of course, this is I mean, everybody uses this tool. Most people do. So this isn't secret sauce information or anything like that. But you'll notice that in this case, I drew it from the top of the candle itself to the bottom of the candle. I did not include the wicks. So in some instances, if I see a clear leg and then a pullback, I'll probably draw it from the high of that one leg to see where it lines up. If it doesn't line up, then I'll move it around. So that's why I was saying you're going to gain this skill. You're going to work on improving this skill by using this tool often. And this is going to help me figure out the calculations that a lot of these programs are also running. I'm not the only one using this tool. Most people use this tool. So we're going to calculate how far this thing's likely to go. So I'm going to use the bodies of these candles, and you can see it stopped right there to the tick. And there was clear profit taking at that point. And then from that point, the whole thing kind of reversed. But it gave me a very, very clear indication that from the time I get into the trade after the market open, I can get into this trade. I know where my stop is and I know where my target is. So I really don't have a whole lot to worry about. Again, your comfort level, you'll develop the comfort later on as you go along and you trust these trades. Some people might see a bar like that and start closing it out, and they may take only 3, 4, 5 points, and then it stops and it reverses. That's okay. I mean, that happens in the beginning. It happened to me. It takes a while for you to gain the confidence and the skill to be able to say and to do this enough times to be able to know without a doubt that this is where it's likely to go. I mean, you do this so many times, you do it over 1,000 times over and over and over again, you'll know. I mean, I'm not saying you have to do it 1,000 times before you get it. That's not what I'm saying at all. But what I'm saying is the more often you use it, the more often you look for it and realize that it's very efficient. One of the things that we see the markets, the more time goes on, the more the argument is made that more computers that are trading the same markets that we are, the more efficient they're going to make it. It's not going to make it more difficult. I think a lot of people used to think that. I remember that argument years and years and years ago that, computers are going to start making it difficult. We're going to lose to them. That's not true. All we got to do is figure out where they're going, where they're likely to go. They're making the same mathematical calculations that we could, for the most part, use a lot of these tools and try to figure out anyway. And again, using this breakout system, well, we were notified long before it actually broke out which direction it was going and that there was going to be a breakout. And of course, that was after non-farm payrolls. We didn't have to jump in and worry about, biting your nails, thinking that, are we going to miss the move on non-farm payrolls? Non-farm payrolls sometimes does just this. I mean, it spikes up and down and it just kind of goes sideways until the market opens at 9:30 New York time, and then we get the move. Not all the time, but it happens. And so you're going to learn in my trading course many different scenarios and the different ways to be able to be prepared for that so that you know exactly what to do each time. If you've got any additional questions, you can always go to my website. You can click the contact form and send me a message. I'd be more than happy to make you a short video like this explaining exactly the answers to your questions. And if you've got any other ideas for videos that I could make, please let me know.